Japan's economy recently took a major hit and slid from its spot as the world's third largest economy. The Japanese people just weren't buying enough, and with the country's rough patch in 2023, this pushed the economy over the edge. So how did Japan's economic meltdown get this bad? Let's break it down. This is why the economy of Japan is in serious trouble. So the Japanese economy shrank for 2 quarters straight, from October to December in 2023. Yep, a sure sign of a recession. And on top of that, Japan slipped to 4th place as the world's biggest economy. According to the latest data, Japan's real GDP, which measures the total value of goods and services produced in the country after adjusting for inflation, dropped by 0.1% compared to the previous quarter in the last part of 2023. When you step back and look at the whole year, this meant the economy shrank by 0.4% annually. Not the best news, making 2 quarters of negative growth in a row. Meanwhile, Japan also fell behind Germany in terms of nominal GDP for 2023. Japan's nominal GDP, which isn't adjusted for inflation, clocked in at $4.21 trillion, while Germany's economy reached $4.46 trillion. One key reason for Japan overtaking Japan in GDP is the huge drop in Japan's domestic self-sufficiency rate. What distinguishes Japan from Germany is the remarkably low level of inward direct investment, according to Toshihiro Nagahama, chief economist at Japan's Dai-ichi Life Research Institute. Things aren't looking too bright on the economic front, according to local analysts. They were taken aback by the latest data, which turned out to be even worse than what local economists had predicted. And get this, 2 quarters in a row of shrinking economic activity could spell trouble, signaling what's known as a technical recession. Nagahama, an expert in the field, pointed out that while it might not officially be called a recession, foreign investors might see it that way because of the consecutive quarters of negative growth. The situation isn't great, especially considering that, except for external demand, things seem to be getting worse overall. Nagahama highlighted how the Ministry of Economy, Trade, and Industry's forecasts point to a huge drop in production for the January to March quarter. And there's more news on the horizon. With events like the Noto Peninsula earthquake and production halts by some auto manufacturers, there's a chance Japan's economy could shrink for a 3rd straight quarter based on production trends. During the last quarter of 2023, October to December, there was a bit of a slump in Japan's internal spending. You know, what people buy within the country. Private consumption, which makes up more than half of Japan's economic activity, dropped by 0.2%. On top of that, business investment also took a hit, shrinking by 0.1%. And get this, it's been negative growth for both of these areas for 3 quarters in a row. Imports, which don't bode well for GDP growth, went up by 1.7%, while exports grew by 2.6%. For the whole of 2023, Japan's economy expanded by 1.9% in real terms and a more robust 5.7% in nominal terms. Now, when it comes to what boosted Japan's economy and what dragged it down in the last quarter of the year, external demands like overseas sales gave a little positive push, adding 0.2 percentage points to growth. But domestic demand dragged growth down by 0.3 percentage points, mainly due to sluggish consumer spending. So why the lackluster spending from folks within Japan? Blame it on persistent inflation. Prices kept climbing, but wages didn't keep pace, which meant people had less buying power. Real wages in Japan actually dropped by 2.7% in 2023 compared to the year before, according to data from the Ministry of Health, Labor, and Welfare. And on top of that, the average monthly spending by households in Japan dipped by 2.6% compared to the previous year, as shown by a survey conducted by the Ministry of Internal Affairs and Communications. To add to the mix, the weak yen didn't help matters either. It fueled ongoing inflation. The core consumer price index in Japan has been above the Bank of Japan's 2% target for a whopping 21 months straight. Despite this, the government and the central bank are still on the fence about whether Japan has fully emerged from deflation. To try and boost the economy, the government's been rolling out measures like tax cuts to encourage companies to hike up wages. But despite some nominal wage increases, especially among big corporations, it's not been enough to keep up with rising prices. And this lack of spending power from consumers is putting a damper on Japan's economic growth. As for the Bank of Japan, they're in a bit of a tight spot too. With market distortions and side effects from keeping interest rates super low for a long time, there's pressure for them to start tightening the reins. But with potential rate cuts from the US Federal Reserve looming, they might have to hold off for a bit longer. Many experts reckon they may not make any big announcements about raising interest rates until maybe March or April. But hey, who knows? The economic world can be full of surprises. Apart from private consumption, there were problems with trade as well. Imports, which don't look good for GDP growth, went up by 1.7%, while exports grew by 2.6%. For the whole of 2023, Japan's economy expanded by 1.9% in real terms and a more robust 5.7% in nominal terms. Now, when it comes to what boosted Japan's economy and what dragged it down in the last quarter of the year, external demand, like overseas sales, gave a little positive push, adding 0.2 percentage points to growth. But domestic demand dragged growth down by 0.3 percentage points, mainly due to sluggish consumer spending. To try and boost the economy, the government has been rolling out measures like tax cuts to encourage companies to hike wages. But despite some nominal wage increases, especially among big corporations, it's not been enough to keep up with rising prices. And this lack of spending power from consumers is putting a damper on Japan's economic growth. As for the Bank of Japan, they're in a bit of a tight spot too. With market distortions and side effects from keeping interest rates super low for a long time, there's pressure for them to start tightening the reins. But with potential rate cuts from the US Federal Reserve looming, they might have to hold off for a bit longer. Many experts reckon they might not make any big announcements about raising interest rates until maybe March or April. But hey, who knows? The economic world can be full of surprises. We're looking at a situation where Japan's public debt is a whopping 2.5 times larger than its actual economy size. To add fuel to the fire, the government just set a record budget for 2024, but it seems like they might be shooting for the stars with their spending goals. And as if that's not enough, Premier Kishida's political party is in hot water due to a scandal involving some shady money stuff within the Liberal Democratic Party. This whole mess traces back to the era of former Prime Minister Shinzo Abe, who was all about pumping money into the economy to get it back on track. But here's the thing, that spending spree led to higher taxes, especially for things like beefing up defense. Then there's this political fundraising scandal that's been rocking the boat, leading to resignations and tarnishing the reputations of the folks in charge. Now, despite all this chaos, the same party that's causing the ruckus is the one trying to fix it. They're tossing around ideas to balance the country's finances better, but it's easier said than done. With the economy taking a hit and debt soaring, it's a tough nut to crack. And get this, a big chunk of the budget is just going towards paying off debt, leaving little wiggle room for anything else. But wait, there's more. Inflation's creeping up, salaries are rising, and exports are booming. So, instead of pumping the brakes on spending, the government is thinking it's time to keep the momentum going by encouraging people to spend and invest. But the problem goes way back to the 90s when Japan's economy took a nosedive after the bubble burst. Since then, tax revenues have been drying up while social spending keeps climbing, putting even more strain on the country's finances. Economists are ringing the alarm bells, saying the government needs to make some serious changes to keep things afloat. But it's easier said than done when there are vested interests and political games at play. See, there are powerful groups pushing for more spending, even if it means piling on more debt. And Premier Kishida? Well, he's got his hands tied trying to please everyone, especially with an election coming up. So, what's the takeaway here? Japan's economy is in a bit of a pickle, and it's gonna take some serious maneuvering to set things right without causing even more trouble down the line. Some people still believe things will look up for Japan's economy. Even though the last quarter wasn't great, we're optimistic about seeing GDP pick up in the first quarter of 2024, said Min-Ju Kang, a senior economist at ING Group. They're thinking that with inflation leveling off and wages on the rise, people will probably start spending more again this quarter. Plus, companies seem to be doing well, especially in the IT sector, so they might start investing more in their facilities, Kang added. Experts at Capital Economics are also feeling pretty good about things, despite what the big numbers might suggest. In December, unemployment hit its lowest point in almost a year, and according to the Bank of Japan's Tankan survey, businesses are feeling the most optimistic they've been since late 2018, they said. They're even saying there's a chance the numbers from the last quarter might look better after they get reviewed next month. Goldman Sachs is also sharing the optimism, forecasting a 1% growth for Japan's economy in the first quarter of 2024. While we might not see as much spending from overseas visitors as we did towards the end of last year, we still think things will keep improving, their analysts said. They're also expecting companies to start investing more again in the same period. The people at Capital Economics are saying the same thing, except a bump in the fourth quarter GDP numbers next month. They don't think this will stop the Bank of Japan from making some changes to its interest rates come April, though. Investors seem to be pretty happy too. Japan's stock market surprisingly had a great year in 2023, outperforming all the other markets in Asia. Morgan Stanley even doubled down on their positive outlook for Japan stocks, calling it their top recommendation. According to analysts at Eastspring Investments, the reason behind the strong performance in Japan's stock market is that companies are making some positive changes internally, and the weaker yen is helping out Japanese businesses that sell abroad. Japan's economic recovery is hitting some snags, and it's got a lot to do with inflation messing with people's spending power. The real GDP took a hit in the third quarter, and consumer spending within Japan dropped for the second time in a row. That's not a great sign, even though the government is trying to keep things moving with accommodating monetary policies. Inflation is still outpacing wage growth. Until that changes, it's likely that people will keep their wallets shut or even spend less. It seems like the Bank of Japan might want to tighten things up a bit, but that probably won't happen until around April 2024. That's when they're expecting wages to start picking up, especially with the annual wage negotiations coming up in March or April. But hey, it's not all doom and gloom. The government is stepping in with a massive fiscal package, around 17 trillion yen, to help people deal with inflation. That includes temporary tax breaks and subsidies for fuel. By the second half of the year, with inflation calming down and wages going up, things should start looking up. Exports are also taking a hit as global growth slows down. Even though Japan's exports of cars are doing all right, other categories like food and industrial supplies are down compared to last year. Speaking of inflation, Japan has been dealing with higher prices for a while now. It's running above the Bank of Japan's target of 2%, especially when it comes to food. And even though the central banks in the US and Europe have raised rates to deal with high inflation, Japan's been hanging on to its negative interest rates policy. But that might change soon. The Bank of Japan is hinting at raising rates in 2024, especially since inflation has been running hot for a while now. They're just waiting to see if wages pick up enough to keep inflation in check. But wages haven't been growing much, unfortunately. Even though some workers have seen a slight bump in their earnings, it's still not enough to keep up with inflation. Plus, smaller businesses aren't doing too well in the wage growth department. The hope is that wage growth will pick up during the spring wage negotiations. These usually happen in March or April and could lead to higher wages across the board. This could help offset the effects of inflation on people's purchasing power. As for the broader economy, things might start looking different. Japanese households tend to keep a lot of their savings in cash, but with inflation picking up, they might start looking at other options like stocks. Plus, the government is expanding investment incentives, so that might encourage more people to put their money into investments. However, higher interest rates could cause some headaches for the government, especially with its massive debt. Japan has one of the highest debt-to-GDP ratios in the world, so any increase in interest rates could make it harder to manage that debt. Overall, Japan has some hurdles to clear before its economy can bounce back fully. High inflation and low wage growth are the main challenges right now, but things might start looking up for the second half of 2024 if wage growth picks up and global demand improves. Overall, Japan's economy is facing some significant challenges, from grappling with stubborn inflation to navigating the delicate balance between monetary policy and wage growth. While efforts are underway to stimulate spending and bolster recovery, uncertainties persist, especially with global economic trends shifting. As we continue to monitor Japan's economic landscape, it's essential to stay informed and explore potential implications for businesses and individuals alike. Until then, click on the next video as we dive into another pressing issue: the global impact of Biden's Inflation Reduction Act.